everyone. Happy Monday. And welcome back to Sin City Crypto. My name is David. I'll be one of your co-hosts. And today, like every single weekday and now on Sundays as well, we're coming at you live from our studio here in the heart of Las Vegas, Nevada, with our daily live show. Today, we have an exciting show as we're talking about how Bitcoin is saving lives in Nigeria. Why is the price of Bitcoin over $47,000 on centralized exchanges in Nigeria? We'll discuss that. We're also going to talk about Bitcoin mining. Difficulty passes another all-time high. Hash rate has been on a tear. We have Mind Your Biz joining us to talk about that and much, much more. And finally, we are going to cover the exciting release of Cardano's algorithmic stablecoin, DJED or JED or DGen or whatever you want to call it. We got our man Forrest's take on it. We'll discuss that and much, much more. But first, allow me to reintroduce him. His name is Rob, R to the OB.
Hola! Is your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel. We take the old, boring, and stale information and package it up in a fun and sexy way. Your boy is juice. You don't want to know why? Because I got fresh squeezed juice.
Where's my juice, Rocco?
Courtesy of Rocco.
Yeah. So, guys, you wonder why I don't have a juice in front of me? I'm telling you, there's collusion happening on this show.
You literally said if you drank juiced lemons, you would throw up on yourself.
That's not juiced lemons. Hold it up. Are lemons red?
This is juice.
What's in there, Rocco? Lot of lemon What's in the juice, Rocco?
All right, listen up. I brought the things, I put it in front of you, and you didn't drink it, and you didn't do anything.
But I was working. I'm sorry.
Oh, I'm sorry.
Yeah.
You were working.
Usually when you bring juice, you bring it for two people.
Okay, so it wasn't working.
No, he wasn't, actually.
Actually, I was not. I can't defend myself there. Over here eating cupcakes.
This is rigged.
Sleeping in.
This is rigged. Anyways.
The cupcake. Did you eat a cupcake?
I did not know.
Okay.
Cupcakes are
Oh,
fire.
you brought one for me, though? There's a cupcake for me?
There's 4 cupcakes in there.
Okay. Do I get one, Rocco?
I brought you and I give it to you.
Okay. All right. I will have a cupcake then.
Unbelievable.
That sucks because that juice looks pretty good.
Cupcakes are pretty American. I didn't know there was they bled into the Italian.
No, in Italy they call them cupacakis.
But the cupcake, they're very good. Eh? They were good? They were good. Tell me. The cupcake.
That sounds like something else, but
cupacake.
Cupacake. All right.
Did you say bukake?
No, I said cupacake.
Okay.
We're getting canceled. So Robin's excited, but look who is out here trying to douse our flaming fire of excitement and greed. It is the Dallas Fed. And they are saying a recession is on the way. A recession is coming. You know what I wish went through a recession is eggs. Robin, can you imagine a morning or a breakfast? I don't know, you don't eat eggs all, and we don't eat eggs every day, but can you imagine never eating eggs again because they're so damn expensive?
No. It's just gonna be a luxury. At some point, it's gonna be a luxury item.
It's like,
and so right now, the go-to cheapest meal is usually eggs, right? You go to Denny's, IHOP. It's like, what's the cheapest thing on the menu? Eggs.
Well,
yeah, and
not no more. And here's part of the reason why.
Filet mignon.
Is it a coincidence that during eggs being at the highest level they've ever been at, the largest commercial manufacturer of eggs is burning down?
Interesting.
This is no bueno.
Are we covering food? Food supply chains.
This is considered a commodity. So,
okay.
Eggs futures.
Okay.
Eggs futures not looking good. And so, is it a coincidence?
What about pork belly? That's a commodity,
Yeah,
it is actually.
And I want to share a tweet by Miles Deutscher. I want to say that's how you pronounce his last name. So I think he's part of the crypto banter team. Not sure, but go follow him if you haven't. Puts out some good stuff. Said it's a massive week for markets. Wednesday, we have the Fed interest rate decision. We also have a lot of people talking about the tech company earnings. Well, Meta starts it off on Wednesday by releasing their earnings, followed by Apple, Amazon, and Google on Thursday. And then the jobs report finds us, or will make its way into the information on Friday, to which Jim Cramer had something to say. The Fed decision on Wednesday could let the bulls party on, which means, guys, we are going to zero. Everything is going in the gutter. Anytime our friend Jim Cramer speaks, the opposite usually happens, to the point where there's a opposite Jim Cramer ETF out there, which I believe, and I'm not kidding, is one of the best performing funds out there. So that's pretty interesting. All right. If you're new here, say hello. We'll drop an all out back at you and welcome you. All right, let's get the show started. Let's hop into the markets and see where Bitcoin is, Robin.
I'm actually messaging Miles. I'm like, yo, come on the show. We like your juice. And you can come hang out with our juice.
Your juice, because I didn't have one.
Yeah, that's right. All right. So crypto's moving. We're looking good, man.
Crypto's moving
Over
down.
$23,000. Not too far away from where we were on Friday. So we won't get into the bull sound, but we will get into the chart sound. Let's take a look here. We got Bitcoin coming in at $23,144. And you can see over the last week, we did see a big rally yesterday. It looks like we were testing the $24,000 range. Didn't quite get there. We bounced right off of 23.9 back down to 23,000. Pretty healthy growth. If you take a look at the month here, you can see that we started the year at 16.5, and we are stepping our way up to the ascending stairs. David, your favorite. Your favorite.
Love that. It's my favorite pattern.
That's right. The ascending stairs. Yes. Because stairs can also be descending.
True.
But at the same time, they're both ascending and descending. It just depends on where you started your trip.
Wow. Guys, if you want more amazing TA, make sure to follow Sin City Crypto.
Guys, if you haven't figured it out here yet, if you are new, I am by far the worst chart guy there is. However, sometimes that's what we got David for, and that's why we bring on these analysts too.
Right today, you delirious or what?
And also, if you take a look at this chart here, you can see that is healthy growth. You don't need to be an expert to see this. You understand this is natural step up of ascending stairs. Yeah, man, that's right. All right.
Wow.
Guys, I do think that we are trending towards 30K and a nice, healthy, steady growth. We need to get to 35. 35 is a big, 25, 25 is a big number, right? It was at 25, like 6 or something. That's like massive resistance, something along those lines. I don't know if you got charts, but we'll get into those in a minute. Ethereum keeps flirting with the $1,600 range. And it's like your boy in high school, you know? So just flirting with 16. You know?
Oh my God, that's okay. Well, if you're in high school, I guess you were under 18.
Hey,
okay.
It's Monday.
Oh God. Okay. What is going on today? Are you all right,
Rocco,
man?
what did you put in this juice?
No more lemons for you.
Like he put the juice in one of these like Zelda potion fucking containers.
Hey, somebody say it's a chupacabra juice.
We will bring it back in. We'll bring it back in. All right. So the chupacabra juice, yes. So XRP at 40 cents, guys. A lot of movement here. Cardano down 3%. I think there's still some residual FUD from some of the nodes turning off. I think it was Thursday last week, right?
On ADA?
Yeah.
Yeah.
And some of the biggest gainers today, DYDX. What is that? I remember I did some research on that. I'm drawing
I believe
a
it's an
blank.
NFT marketplace.
So they are up 14%, 44% on the week, just crossed into the top 100. And then you got Mina Protocol still rallying, up 8.5%, up 30%. This is a zero knowledge proof ZK rollup for the Polygon Ethereum ecosystem. They are their own standalone chain. They're not a layer 2, but they are partnered with Polygon and Ethereum. And so we're seeing that whole ecosystem pop up, especially in the scaling solutions. And then Phantom still up 18%, still in the green a little bit. Some of the biggest losers today, you have Lido down 10%, Flow down 8%, Near Protocol down 8%. So it is not all green across all the markets. And then just to take a look at a visual representation, kind of the same thing here. Mina Protocol up 30%. As you can see, Aptos still up 30% for the week. So. And then markets are down. We got NASDAQ down 1.5% and S&P 500 down almost a full percent. That's all I got, David.
Man. So you talked about Aptos, and I think I might be wrong here, man. So I went along on Aptos, right? I saw this little secondary bull flag forming, but it looks like it's starting to break to the downside. Can it recover? Yes, but The bands were super constricted. This is on the 4-hour, by the way. The bands were super constricted, and now price has broken below the bands, and it looks like they're expanding. RSI is pretty low. It's coming in at right around 45. And where we headed, I got my stop loss here set above $14.50. There's a decent chance I might get stopped out. But again, when you're leverage trading, it's important to make sure you do isolated leverage trading, unless you want to put the rest of the money and positions you have on the line to not get liquidated. Make sure you do isolated, and also make sure that you're comfortable if it goes against you, losing all of that money. And so that's what I do. So no big deal if it goes down. You know, you're never going to be 100% right, especially when you do charts and probabilities. So this one looks like it is breaking to the downside. Yeah, this candle here is pretty big. So if I throw the Ichimoku on, kind of just to get an idea of where we are. Okay, so we should. So this is a little good news for me, or if you got a long on Aptos. This is good right here. We do have the cloud acting as support right around $16.48. Now, if we break into the cloud, that is no bueno. On the way back up, we'll come test resistance right around $17.23. As far as volume, we should see it level out if it does drop around $14. We see a lot of volume here between $12.70 and $14. So, Aptos, oh no, looks like it's breaking down. Bitcoin, though. Bitcoin also looks like it probably will break down. This is on the 1 hour. We've been in this rising wedge. We are trading at the lower bounds right now. So, of course, we don't know when it's going to break, but these typically do break to the downside. And so maybe if you think there's one more leg up before it breaks down from this pattern, maybe go long on Bitcoin. Maybe, it did get as high as $24,000 or $23,900, which is the upper end of this resistance line here, and came right back down and created support on top of this downtrend line. And it looks like we're kind of consolidating. This is, of course, on the 1 hour. And then I just wanted to throw on my short margin pressure levels, which are not here right now. Oh, no, I want to do the Ichimoku. The margin pressure levels are going to be on Filecoin. We're doing some tea on Filecoin as well. If you're a fan of Filecoin, put a 1 in the chat. I know Robin's a fan of Filecoin. He's been talking about it so much. I think I might FOMO in. And we got some news on Filecoin as well. So pretty bearish on the 1 hour as when it comes to the Ichimoku cloud. We saw the cloud flip red. We also broke underneath the cloud. We came back to retest, got rejected. I'm telling you guys, cloud support resistance. You're trading in the cloud. It's no man's area. Would not recommend swing trading or scalping when price is in the cloud like it was here. It tends to either violently move one way or another or consolidate in the cloud. You want to wait for it to break above or break below before you take a position, whether that's to the upside or to the downside. Right now, it looks like we got rejected by the cloud here right around $23,300. Again, this is on the 1 hour, so pretty short term. So how much farther can we go? There's a ton of support right around this $23,000 level. We accumulated there for a decent amount of time for a few days back on Friday leading into Saturday and Sunday. And there's tons of volume coming in at that level as well. And the last one I want to talk about is Filecoin. So Filecoin, data storage. Again, we're going to cover the news on Filecoin here in a little bit, but what are we looking at Filecoin? So I took the local high here that we had. This was on Monday, the 23rd of January. This is on the daily chart of Filecoin. This is where, so right now we're accumulating where there's tons of volume, right around this $5.78 level. That's where we were. We're currently sitting at $5.12. Some levels that I'd be looking to buy in as far as maybe swing trading or scalping some profits would be this 4X short level right at $4.33. This was support and accumulation zone going all the way back to November of last year and as recently as the middle of January of this year. So Filecoin, bullish long term, and possibly a swing trade when it gets down to this between $4.33 and $4.62 level. Now you talked about Bitcoin. So I got Bitcoin on the 1 week. And you talked about 25K. 25.2 is a number I would say we need to break above and create support on top of. But again, we started approaching that, and you can see on the weekly here, we're starting to print a red candle. Now this does it. So this weekly candle just opened yesterday. So we have a whole week to go. How far down will it go? We do have tons and tons of support, guys. right at $19,500. So if you think Bitcoin is going down, I would hide your stop loss just above $19,500 or just below $19,500. So that's it for charts. Let's hop into some news before we bring our man Seth from Mind Your Biz on. So the first thing I want to talk about, since we kind of got done with the chart, is Filecoin. So this is pretty interesting. This is sourced from AMB Crypto. Can Filecoin's latest achievements pull FIL, their token, out from the bear's grip? So let me actually make this a little smaller. All right. Filecoin recently revealed that it is on a mission to deploy the Interplanetary File System, also known as IPFS, in space. The mission will take place in 2023 aboard Lockheed Martin's LM-400 tech demonstrator spacecraft. The evaluation of in-space use cases for decentralized storage is being done on this mission for the first time ever. This new project can be a game changer for Filecoin, as it is a first-of-its-kind mission. The mission will showcase an IPFS use case for space-to-ground communication. Through the use of IPFS, data from space will be content addressed and made accessible on the IPFS network. Apart from this new announcement, Masari's data revealed that Filecoin's active deals increased by 117% quarter over quarter in Q4 of 2022. This looked optimistic for Filecoin, as it represented its increased adoption across the globe. Now, if you remember, under President Donald Trump, I believe the U.S., they created the Space Force. I believe that was under Donald Trump. So there's definitely more interest in space and what's going on there, and more, I guess, more missions going there and finding stuff out. The word's not coming to me right now. But if Filecoin can facilitate transferring information and storing data, I mean, it's pretty bullish for Filecoin, right, Robbie?
Yeah, man. I'm still trying to figure out what the hell Filecoin's going to do in space. Like, I mean, well, I know you kind of went over it, but it's like,
it will showcase space-to-ground communication, and data will be content addressed and made accessible on the IPFS network.
Hey, man. Boy, we're going to take a rocket right to the moon with that Filecoin, baby. Right out of space. How you doing? No, I like Filecoin for the simple fact of how high it got into the market cap list. You know, how large its market cap grew and how much market dominance it had. I think it cracked into the top 10 at one point. And so it being as far down as it is, and it has a ton of room to grow. So if it gets anywhere close to its all-time highs, you're talking about a 50x. So out of the top 100 projects, I think it has the most upside. If you believe it'll get back to its all-time highs, that is excluding tokens like ICP, where their former all-time high was just a miscalculation by the market makers and came out with a price that was way too high. So naturally, it grew its price, its token price, and market cap to where it was, and then it pulled back. And so I haven't seen that from any other projects. So for that reason, I'm eyeballing Filecoin.
For that reason, I'm out.
For that reason, I'm eyeballing Filecoin. Yeah, I don't know, man. I just, it's not the sexiest project. I think those sometimes tend to be the sneakiest ones that, because remember, if the entire community is buzzing about something, it's probably too late, right? Yeah. And, we saw that with Chainlink, where, hey, it might not be the sexiest platform. Might not, it doesn't have a lot of utility for the average user that just simply wants to trade crypto or NFTs. However, it's an integral part of the ecosystem that is crypto, something that is needed. And Filecoin also provides that in data storage as well. And so, and they're the top project in this sector. So for that reason,
very far from its all-time highs.
Very, very far.
Like we're talking, it's at $5. It was at $250.
I know. Yeah, I know. I was shown this before. I'll just show it one more time. So just to put it in perspective, what we're talking about here. This is the all-time chart. Now, what I do like is that it came out in 2017, before the 2017 bull run, ran all the way up to $26, and then
that was the tail end of the bull run.
Tail end, yeah. And then what it did is it survived an entire bear market.
And I think that's even more telling for you to be a new project that launched at the tail end of a bull run and to make it through one of the worst bear markets at the time.
Yeah, you can see here, at initial release at $11, and then it fell down to $2, and it traded here around $2 to $4 for the entirety of the bear market, and then it went through. So first of all, it's already been through a bear market, so I feel at least confident that it'll probably make it through another one because it made it through this one, and now we're in a bear market again. But the thing is that look, it got as low as $3. It got to the same price as before. And the all-time highs are at $179, $180. And so if it sniffs a 10x is $50. I mean, think about that, guys. So that's why I'm kind of eyeballing it just from price history. So
okay. Let's move on from Filecoin to Cardano coin and their stable coin. We have a video from our man Forrest. He does a Forrest Fast 5 every Monday. Today we're talking about Cardano's algorithmic stablecoin, DJED or DJED. And so let's get Forrest.
Before we get into it, though, I need to address something with the chat. Why have you not hit the like button? We only have 40% likes. No, 30% likes. 60 likes, 150 people. That's almost 30%. I'm over here trying to do my math. But guys.
Okay, we got the message.
All right, ready? You done doing whatever you're doing? All right. DJED, stablecoin, Cardano, what is it? Launching this week. Okay, go.
What to expect as Cardano-based over-collateralized stablecoin DJED is set to go live. For the love of all that is good in this world, please change this name from DJED. Now, this is a bullish development for the Cardano ecosystem. This is great, but please change the name DJED. This is extraordinarily confusing. A stablecoin should have USD in the name so that it is blatantly obvious that it is a stablecoin. This is the same issue that we see with DAI and MakerDAO on the Ethereum blockchain. USDT, USDC, those are very, very obviously pegged to the dollar. DJED, this is just not obvious. So with that gripe and complaint out of the way, hopefully they change that. I don't know if they'll be able to in the future. I just can't imagine a world where we pay for groceries with DJED. It just sounds like way too cyberpunk-esque. We should...
Hold on a second. You know what? Guys, do you like the name DJED or
is it JED or
DJED?
DJED?
I think the D is silent. If you like the name JED or DJED or DGen or DGen Cardano, whatever it is, put a 1 in the chat if you like the name. Put a 2 in the chat if it's a what y'all doing over here?
1 if you like the name, 2 if you don't.
Thank you.
Okay.
If it's going to be... I'm going to move on from this point. All right, the long-anticipated algorithmic stablecoin is poised to drive new adoption to the Cardano network. They call it an algorithmic stablecoin, but they also call it an over-collateralized stablecoin. It's a hybrid of the two. So this is very, very similar to what we saw with MakerDAO on Ethereum. You'll be able to deposit your Cardano and take out a stablecoin loan against that Cardano. All right, in this case, you'll be able to deposit your Cardano and take out and mint rather some DJED tokens, DJED stablecoins. DJED sounds a lot like DGen. I don't know if I like this name at all. In fact, I don't. But moving on, this is very similar to MakerDAO. If we go to the actual documentation here, it is a hybrid though. It is a hybrid between over collateralized and algorithmic. So it's over collateralized to the tune of 400 to 800%, which is very restrictive and not very capital efficient. However, it is going to be safer. They're going with a safer approach. I believe with MakerDAO, you can take out loans as low as 150% collateralization ratio. So we'll see if they if they look to change this or re-optimize it, rebalance it in the future. But then we do have the algorithmic portion of this stablecoin. What is this Shen reserved coin? So the Shen reserve coin is the algorithmic incentive to make the system over collateralized. So if we go up here, if we go above 800% collateralization. You can no longer mint Shen tokens if you go below the 400% over collateralization target. You can only burn Shen tokens, but you can still mint them. So what are the advantages to holding Shen? Basically, you'll receive all the DJED and Shen mint burn fees, right? So this allows you to a source of yield that is kind of tagged or not pegged, but correlated with the Cardano price, but has a little bit more exposure. So overall, this is a good thing for the Cardano ecosystem. Is it anything revolutionary? No, we've seen this play out on many other layer ones. So this is just kind of a necessity. Cardano has needed a native stablecoin. If we look at Cardano's TVL here, Cardano, based on its DeFi ecosystem, one variable which is commonly used to value layer one blockchains, Cardano is grossly overvalued by this one metric. Am I saying that Cardano is overvalued overall right now? Not necessarily, but what I am saying is that if you were to value Cardano based on its TVL and its DeFi ecosystem, Cardano is very overvalued in relation to many other chains. For example, Cardano only has 78 million in total value locked. If we go to Cardano's price and market cap fully diluted valuation, that's $17.2 billion. Now, if we go to any other example, let's take AVAX here. It's got a a fully diluted valuation of $14.6 billion. So less than that of Cardano. However, Avalanche has more than 10 times the TVL and 10 times larger DeFi ecosystem than Cardano. Now, obviously, these two chains are not the same and they have different value propositions and whatnot. So you can make the argument that Cardano offers or has other features that make it more valuable than fetch a higher fully diluted valuation than Avalanche in this case, not just its DeFi ecosystem. But if you isolate for its TVL and isolate for this one variable, Cardano is very overvalued. However, the introduction of this stable coin should incentivize people to lock up their Cardano as TVL, take out loans, DJED loans against those stablecoins, and should push for an increase in Cardano TVL, so we can see this TVL to fully diluted valuation metric start to balance more in favor of Cardano. So overall, I think this is bullish. Now, my opinions on Cardano as an investment, usually it just outperforms everything in a bull market, underperforms everything in a bear market, but this is going to make it more attractive. And as this DeFi and TVL ecosystem proliferates and grows, this potentially sets up Cardano to be a better investment in the next bull market, a higher performing investment with a richer DeFi ecosystem. So thanks for tuning in, guys. I hope this was helpful. Peace.
All right.
And I don't think we've talked enough about the DJED stablecoin, and interesting that you have a stablecoin that represents $1, right?
Mm-hmm.
Yet there's no dollars backing it. And so it gets all of its backing from the Cardano ecosystem, which puts an interesting thought here. Now, it's 4 to 8 times more collateral than what is said to be in the pool, right? And so if you were to, right now, I would think it's very secure, but you got to think, what happens if Cardano's price, say, goes parabolic in the next bull run, and then it pulls back, like, say, 80%? Is the reserves going to be able to support that? Because it's basically has its valuation by what is locked up in the Cardano ecosystem, in both the Shin token and an ADA token. So I know it's not exactly an algorithmic stablecoin in the form that we used to see it, where you're arbitraging to keep the price stable, but this is not trying to keep the price stable. This is just simply having enough reserves or liquidity for a bank run, right? And if the valuation of your token is 4 to 8 times, but yet you have a 90% drawdown on the token price for whatever reason, whatever you're backing it with is going to fall by 90% too. And if it's only 4 to 8 times collateralized, it's not going to be enough if you had a 90% drawdown. Now, obviously, these 90% drops don't happen in one day. So, you're probably going to be incentivized to add more in for returns. But will the business model work? That's kind of my question. I do want to give a little love to the chat. I haven't had a chance to do that yet. If you're new here, say hello so we can drop an hola back at you. We got Rin1010, Sauce Boss, Arthur, Jim Browning. We got Door Gunner, Kenton, Toby Chapman, Rosen, Mark Thomas, A-Train, and DCA. Hola! Welcome to Sin City Crypto.
Also, before we bring on Seth from Mind Your Biz, make sure we're going to close the poll in 2 minutes. Will the DJED stablecoin be a success? Make sure you cast your vote before we close it up.
Dude, I asked 1 or 2 in the chat on the name, and it was a resounding 2. So the chat does not like the DJED stablecoin name.
I kind of agree with Forrest, though, man.
I saw somebody put Jedi in there. Leave a Luke Cap. He said, I like Jedi. Maybe we just add an I at the end and we call it a day, and may the force be with you.
All right, let's bring on our special guest. We have Mind Your Biz joining us. Rocco. Yo.
Hey.
What's
Hello.
up, bro?
How you doing, man?
Not much. I'm doing great. I realize though I'm probably a little underdressed for the occasion. I got to do my we've got a thing going on here, gentlemen.
What do you got?
Every time I visit Las Vegas, even virtually, the clothes need to come off and be changed somehow. So we'll start. Well, less is more, right? We'll
start with the hat.
Guessing. Yes.
Start with that.
Just the hat.
How do you just get younger every time I
show.
see you? That's what I want to know. How do you get younger? Like, what kind of vitamins are you taking?
What kind of vitamins do I take?
Is it zinc? It's got to be zinc, right?
All of it.
Zinc is a mineral. Come on. So first off, no, it's not. Not the vitamins and
He's supposed to be a
minerals.
chef. This guy's
It's not the good old fashioned hard work. You guys, everybody has plenty of good old fashioned hard work.
Potion.
You got the Tom Crown.
All the fear and loathing. All the fear and loathing in crypto. There you go.
You're in Loathing in Las Vegas.
There you go.
What a movie. Guys, if you're not familiar with Mind Your Biz, Seth from Mind Your Biz, I don't know where you've been living. This dude is a beast in our space. Seth, we always love having you on, my friend.
When are you coming back to Vegas? Hang out again.
It's never soon enough, right? Here's the thing, and you guys realize I'm close enough for actually a very, very short drive. So like, we probably need to just set some dates. You let me know what's on your calendar, and we'll do the IRL thing, right? Like, and I'll shadow you for a minute, and I'll be your camera operator. We'll do something like that.
Deal. We'll send you an e-invite. Okay. Just make sure you say.
Is that what we're doing now?
I don't know what we're doing.
An Eventbrite just for Sin City Crypto. I would sign up. Everything you guys are doing in person.
All right, Seth. DJED stablecoin, algorithmic stablecoin, Cardano.
First of all, do you like the name before we even get into it? You like this name, DJED, DJED, whatever?
Yeah. I think we're discovering that nobody likes the name, and I mean, like the developers, I think are sticking with it because you hear some people call it DJED, but that doesn't really fit the whole compliance ethos, right? Calling it something that sounds like DGen. I mean, call me crazy, but regulators normally don't like anything that you're doing in crypto being called degenerate or degen. So I don't know how I feel about DJED. JED, spelled with a D at the beginning, is kind of like, okay, like whose English do you speak exactly?
Why?
And how like, is it the Queen's English? Is it South African English? Is it something else? I can't quite follow, right? Like there's something about the nomenclature. There's something about the etymology. There's your $5 word for the day over on Sin City Crypto. I'll lob one over the fence to the audience there. Something about the etymology of the word JED that I just can't put my finger on.
Hold on.
You're using two.
What's edamame?
Robin has pronunciation issues.
Edamame? Is that like
that's
Japanese like snack, right?
Okay, yeah, here you go. I'll make it needlessly complex. It's just I don't know where that name comes from, and I don't care for it. To answer your question directly, no, sir, I don't like it.
Do you like the idea of another algorithmic stablecoin? Do you think they're making a mistake by A, launching it now, B, there's talks of a stablecoin legislation coming? Was this a bad move? Should they have held off on this, or what are your thoughts? Can it be successful?
That's a tough one. It's a tough one because I think that algorithmic stablecoins, I think that there's a place for them. There's a future for them, and there's definitely a brighter future for them than just having a basket of specifically dollars or institutional paper as we've been accepting with USDC. Because Circle, I do not have a lot of confidence in their system either. Frankly, a lot of people say that USDC is like the de facto CBDC, that it's the de facto, like it's the chosen stablecoin, and I really struggle with that because I don't think that we should trust them. I mean, we've had similar problems with centralized custodians for quite some time. Coinbase is no exception, and Circle Group is no exception. So I worry about that model being trusted moving forward. It requires trust. Algorithmic stablecoins, when they are over collateralized and they depend on something called a collateralized debt position, those are far more trustworthy, in my opinion. And it's as simple as I give you $2 worth of gold, or maybe in this case, $4 or $5 worth of gold, and you give me one note. The difference is we're talking about cryptocurrency where I can't forge that note. I can't put it in the Xerox machine. I can't fly overseas and find some long lost printing device that'll help me make more of them. It's cryptographically signed. It's serialized on the blockchain, and you're not going to forge it. So I like the idea of these algorithmic stablecoins when they're over collateralized and they rely on that collateralized debt position. So I think the basis, the fundamentals there, guys, I think it's sound. Personally, I like it.
What do you think? So I know we were talking about collateral when it came to stable coins in the past, and I brought up the thought where instead of collateralizing it with something inside the crypto ecosystem, to go outside of it, perhaps a commodity, pick gold or even a basket of assets, index fund. I don't know, something that isn't going to crash as hard, because the time that you see the breaks in the algorithmic stable coins or anything in the crypto ecosystem is usually because of cascading price movement, where price goes down so much that it kind of breaks all the systems that were designed to keep things stable, because a lot of the designs are relevant to what the price is or needs to be. And so if you're collateralizing it 4 to 8 times the token, if you were to say drop by 90%, which is not unheard of in the crypto space, I feel like it's a recipe for disaster. So if you were to take something outside the crypto space, I think that kind of makes sense. But I mean, sure, I don't know. That's just I'm no computer science engineer. I don't have any experience in writing code. It's just kind of my thought. I'm just like, maybe not tie it to something that's as volatile as crypto if it's supposed to be stabilizing a volatile market.
Sure, that makes sense. I think you'd make a case for that for sure. I think you could talk about there being hybrid baskets. There could be, then you could look at commodities only. I know that there are some parts of the Cosmos ecosystem, and I'm going to name a project here, not to try to like shill or get into any FOMO here, but there is one project that I'm aware of because I did marketing for them early on. So there, you've been disclaimed, right? Like I do have a day job in crypto, and my day job is to give projects attention. I'm not doing that, now. Just to say, I'm familiar with their model. A project called Comdex in the Cosmos ecosystem. And they were creating an over-collateralized stablecoin that was based on certain real-world commodities, but it was primarily based on cryptos first because that's easier to write the code for. To answer your question, I'm not a programmer either, but I talk with them on a regular basis, and for them to be able to come up with those CDPs, those collateralized debt positions, based on something where they can just get so-called simple Oracle data from the blockchain, to be able to keep those assets native from the blockchain being minted back to the blockchain, it's a much easier ecosystem to work within and to define, as opposed to figuring out, okay, well, whose exchange are we pulling data from and whose feed from that exchange are we pulling data from? You realize there's not just one source of truth when it comes to the various exchanges around the world for various different asset classes, including Forex. That's why there are arbitrage opportunities even within commodities. So like, this stuff is tricky. Really, it's tricky. You're always trying to figure out like whose book you're reading from and whose chart you're reading at that time from that book. So
a lot of one last thing. Well, a lot of the regulation buzz that we've heard in Congress is that they want to regulate stable coins. And there's been a push to at least get that started before we get into the crypto ecosystem, or at least be the first stop. whether it is or not, I think it's safe to say that the regulators have questioned what is backing a lot of these stablecoins. Particularly, Tether has been at the forefront of that conversation over and over again. We've seen the audits of Circle. Now, what do you think regulators? Where do you think they're going to stand when, or do they have anywhere to stand when it comes to a stablecoin that isn't backed by a dollar? And it breaks the business model that they're trying to regulate and what they're trying to say, hey, this is what a stable coin should look like. Because that's essentially what the regulators are saying, like, hey, it needs to be collateralized one-to-one by, X amount of money for liquidity, X amount of money in paper dollars, and no institutional debt. And that's ideally what they're looking for. But yet here now you have stablecoin, not $1 behind it.
Right. Here's the thing. I'll accept that from the U.S. federal government when they hold themselves to their own standard, as far as it being backed one-to-one with collateral and no institutional debt. Show me any kind of an institutional bank or a retail bank that adheres to that standard, and then I will gladly welcome any regulation that you want to put forward that requires the same thing of stablecoins.
You know what's funny? It's been, the reserve rate has been at 0 since the pandemic. Zero. So the banks don't even have to hold anything liquid that they have. So I agree. Here's my thing, okay? Because I'm looking at, all right, UST, right? Terra stablecoin, that thing collapsed. So that's like the one I'm looking at because it was the most successful. And when I look at Cardano and how DJED is formulated, and I don't like the name either. Someone in the chat said DJED, it's Egyptian. DJED means pillar and Shen means royalty or something. Yeah, it was a cryptic mushroom said it. So anyway.
I've got some Egyptian too. Sorry, I'm going to totally interrupt and I'm going to do a little sidebar here just because it's convenient. We're talking about about etymology, and I bless you, whoever did that. Right. Edamame? So at this point, right here, that's great. Thank you, cryptic mushroom. What you might not know is Seth comes from the Egyptian Seti, which is the god of chaos and war. Sorry.
What about David?
You were saying?
What about David?
David is actually a Hebrew name.
I'll take it.
So is Seth, technically, but for the sake of conversation, there's an Egyptian variant.
Guys, you learn something new here every day. So back to the DJED thing, okay? So what's interesting is this Shen token and how that is not directly correlated to Cardano, right? It's the Shen derives its value from the minting and burning fees. So so once the collateral drops below 400%, you can no longer burn the Shen, and when it's above 800, you can't mint it. And so, of course, we have to see how it plays out. I don't think it's going to get a lot of adoption. I think people are still scared. Luna was only less than a year ago. You have the whole thing with the stablecoin regulation bill. People don't know. So they're not going to want to park their money in another algorithmic stablecoin or even just a regular centralized stablecoin. So, but if there is one person and one layer one I trust to really vet and do the right thing and take their time and make sure all their T's are crossed, all their I's are dotted, it is Cardano, it's Charles Hoskinson, it's IOHK. So we'll see how it goes. And actually, we did our poll. I believe over 66% of people think that DJED will be a success. And so if you're new to the chat and you didn't get a chance to vote, do you think Cardano stablecoin DJED will be a success? Put a 1 for yes, put a 2 for no. All right, I want to move on from the DJEDs, from the pillars and the royalties, and I want to move on to how Bitcoin is essentially saving lives. And this is happening currently in Nigeria. This is sourced from Cointelegraph. Bitcoin premium hits 60% in Nigeria as country limits ATM cash withdrawals. So I have a few things highlighted here. Price of Bitcoin has skyrocketed well above global market levels amid continued efforts by the central bank to push its citizens into a digitalized cash economy, which is CBDC. At the time of writing, the price of one Bitcoin on the Nigerian crypto exchange NairaX is approximately $38,800. This is more than 60% of what the current market value is. It comes as the Central Bank of Nigeria has continued to impose limits on ATM cash withdrawals amid an ongoing effort to accelerate and shift to a cashless economy. As of January 19th, citizens are only allowed, January 9th, citizens are only allowed to withdraw a max of $43 a day with a weekly limit of $217. So I'm gonna ask Robin first. This is literally, and I know, saving lives, right? Does this does this fall into the Bitcoin can literally save people's lives?
Yeah, I mean, for the unbanked situations, people that aren't plugged into the same network that we're plugged into, or that the main countries are, or the dominant countries in the financial system, and you can see that there isn't even an arbitrage opportunity there, right? Because if your country's currency is so debased that you can't go and change it to dollars and buy Bitcoin, if you can't even do that, you can't even arbitrage it, right? Because somebody would. So that means that they're lacking so much infrastructure that you're not even able to capitalize on Bitcoin's price being where it is. Because I mean, if the infrastructure was there, which obviously it's not, you could change your money into dollars, buy Bitcoin, sell it into your native currency, and get a 60% return. But you can't do that because the infrastructure is broken. I'm under the assumption. Now, that's just my my DJing brain there, taking a look at a price gap. But obviously, there's a demand for it, and the currency that's there, it's not strong. So,
what are your thoughts, Seth?
So I think, I agree with Robin to a large extent. If there were an opportunity to do the arbitrage at size or at scale, somebody would have already done it at size or at scale. There's probably not. But here's the thing. It's a lot like micro lending was 10 years ago, 10 years plus ago in the same region. It's entirely possible for you to do good and do well at the same time. I don't think that those two things are at odds. And I think that financial philanthropy or working within fintech to solve real world problems in developing nations, that's been the opportunity for a long time. That's part of the reason, jumping back in the conversation, that the Cardano team and that Charles Hoskinson has been so focused on that region, is that it doesn't take a whole lot financially to help an entire country come up, right? Or to help an entire community come up quite a bit, right? To improve their standard of living measurably, right? Significantly. And I think the same is true here in Nigeria. There's a thriving film ecosystem, thriving cinema ecosystem in Nigeria. Unless I'm mistaken, the Naira, I think that it is supported, their economy is supported by M-Pesa. So they've got this phenomenal peer-to-peer digital payment system that's done entirely by phone. And they've had that for quite some time. But yeah, Bitcoin does help get rid of those limits and gets rid of the custodian problems and censorship problems of even a more frictionless system like M-Pesa. So I think it can totally be true, everything Robin's saying. Yeah, maybe there isn't an arbitrage opportunity for anybody who's coming in with a fairly decently sized position to try to chase down that alpha. But I think for anybody who is positioned to get some Bitcoin into exchange there, or onto any exchange that has the edge case of Nigeria, I think that they are going to get a little bit of alpha, and they're also going to feel good about it too.
Yeah, I definitely think that there's going to be opportunity there for the citizens to get exposure to Bitcoin, and the price will stabilize over time for sure. Even if it moves at a snail's pace, it should balance out. I mean, we've even seen that with GBTC, that the gap or the premium there is closed from was it like 40% premium down to like 20 something?
It was getting up to 50.
Yeah, 50%. So. That's been one of the best performing assets across all the stock markets lately this year. So very interesting. So
the markets are tanking a little bit. Let's take a peek at what Bitcoin's doing just real quick, and then we were going to get into some Bitcoin mining narrative here. But this is on the 1 hour. This is a pretty.
It's a Bitcoin candle. Damn.
It's a Bitcoin candle. Yeah, on the 1 hour. So we're currently sitting at 22.8. And guys, we talked about this, I believe, in the beginning. 22.6 is a good support level, which we wicked down there and bounced right back up. Tons of volume there. Also, we did have a bottom here. This was back on the 26th of January. So Bitcoin dumping. Everyone's asking, well, why? Well, here's one reason why. We discussed this earlier in the show. Is the Dallas Fed came out and said recession is coming. And so when one of the Fed one of the sectors of the Fed, right? The Dallas Fed, when they come out and say, hey, a recession, we've been talking about it for a year, right? Indicators flashed last year, the yield curve and the 2 negative GDP quarters. And now you got the Fed coming out and saying a recession. People might be saying, hey, maybe we are in a recession. What I figured, though, is people would say, okay, they're finally, because you think about it just from like a common sense perspective, okay, the Fed's coming out and saying recession, that means they can't really hike much longer, right? And so, but it seems like from just shot in the dark here, throwing a dart at the wall, that people are taking this news. We got the Fed interest rate decision on Wednesday. The CME went from 98% down to 95% for a 25 basis point rate hike. There's talks about maybe they'll do 50. I don't think they'll do 50. I think 25 is a number. But what do you guys think is behind this dump? Do you think it's the Fed saying we're going into a recession? Do you just think, like, what's your inkling here? I'll ask you first, Seth.
Oh, wow. I think, I think the Fed's been, I think that them finally admitting that we're in a recession bordering a depression, the moment that they finally actually openly say that it's a recession, that's our top signal. That means we are actually in a depression. That's my take on it.
That means we're in a nuclear war.
The world is over. So
what do you think, Rob? What do you think it is?
Well, first of all, like, is this a real pullback? Because it is still what's the number? It's 3.5% or almost 4% on the 24 hours, 1.3% on the last 1 hour on Bitcoin. So almost 4% is pretty substantial. But I wouldn't really consider it a dump unless it gets up into at least 6%. So, but will it keep falling? Are people getting super bullish and putting in long positions? Could we get cascading liquidations throughout the exchanges? Well, we've seen it time and time again. So that is definitely on the table.
Here's something interesting too, and this kind of fits the narrative here. But this is Bitcoin balance on exchanges, and we've seen a net inflow of over 7,000 Bitcoin hit the exchanges over the last 24 hours. So you're hearing people say, this is the biggest bull trap in history. I know a lot of people who do crypto on Twitter have been saying it. They've been tweeting about it. You have, I believe, Mark Yusko. You had someone else, these big hedge fund people coming out and saying, this is a bull trap. And so do you think people are like, all right, we got rejected at 24. There's another leg down because there's still talks of $10,000 to $14,000 Bitcoin. And we can see here on-chain data shows people are moving their Bitcoin on exchanges. We see a price dump. Are they cashing it out? Are they expecting?
Well, here's Rocco. Will you pull up my laptop here and layer that in? Here's something to take a look at. Fear and greed index is at 61, and so we've seen this has been a good measure of when people get overly excited. They put in their long positions, and when this needle starts moving too far into the green, it was only a month ago we were at extreme fear. So. The sentiment has changed lately, so I wouldn't be surprised if we do get a natural pullback because we have moved quite substantially in the last 30 days. To take a look at the 1 month chart, you can see, we went from 16.5 all the way up to 23,000 without any significant pullback. So it is to be expected. I don't think we'll go anywhere near the 19,000 just yet. Even if it is on the table, like I said, it could just be a little flash crash, and then we could bounce right back, or it could be a little pullback, which could get back to the testing the 20K region. So,
yeah, and then one last chart I want to show. This is the same thing, Bitcoin, but on the 4 hour this time, and you can see we saw this big red candle from 23.6 all the way down to 23.1 or 23 flat, and we saw this cloud act as support. And then we saw a green candle print, and then bam, dipped right into the cloud. Again, this is kind of no man's land, guys. If this does continue to go down, I would expect this step up here, this 22,200, to be very strong support. If we break below that, you're looking at close to 19.5 to 20.
One thing that is not pulling back, though, is Jimmy with his 10 gifted memberships to our community. So round of applause, you, Jimmy. When the markets crash, Jimmy,
He is the official hype man of yeah. He's the official hype man of Cincinnati Crypto. All right, I want to talk about Bitcoin mining a little bit. So first thing I want to talk about is the difficulty. Hit a new all-time high, rising by 4.6%, further securing the network. And I have this chart pulled up here from Glassnode. So we have in blue, you have the difficulty. In orange, you have the hash rate. White is the price. And then on the bottom is this histogram of changes, whether it's difficulty changes to the upside or to the downside. And this is the second largest difficulty increase we've seen go as far back as 2021. Obviously, with the highest being October of last year, right before the FTX thing went down. And I'm actually going to zoom in here a little bit. You can see the hash rate has been on a tear, difficulties on a tear. Now, Seth, of course, difficulty goes up. That means the network gets more secure, but it also means it's more difficult to get the block rewards. What are your thoughts in general? Like, is this a net negative or net positive for price? Obviously, we know it's good for the network. What are your thoughts?
Yeah, it's kind of funny. There are a lot of people who will use on-chain metrics to as though it's a leading indicator, and as though it's always a leading indicator. And I think this last cycle even has kind of proven to us that things are moving a little bit differently now, right? Blockchain infrastructure has been under new management for quite some time. And let me characterize that further by saying there are larger institutional mining interests in Bitcoin that have either grown in power and in sway over the current net hash, it's called, or there have been new players that are bringing in institutional money in order to do Bitcoin mining at scale. And they have different considerations from the previous, the old guard that was mining at almost any cost. You have some groups that were mining Bitcoin 5 years ago or 7 years ago on machinery that they've kept in production because they've decreased their power cost by deploying that side of their infrastructure, right? By deploying more renewables in some of their power generation mix. And you can't do that at scale, right? If you've got a 1 gigawatt facility, right? Or if you got 5 gigawatts all in, fully deployed on the network, good luck getting that all transferred to renewables. You have to pull from the grid, or you have to just continue on the power generation model that you were already at. What I'm saying, David, is that some of these groups are not quite as agile as they used to be. So as soon as we start to see that Bitcoin becomes unprofitable to mine, we may see capitulation faster from these larger groups, even though they should have enough capex. They should have enough rather operational expense in the bank. They should be setting that aside long enough to weather the storm for a few weeks or a few months. They probably don't, and we've seen that over and over again when the difficulty went down precipitously as it became unprofitable to mine. It's kind of crazy. A lot of these groups also became extremely over-leveraged when they thought they had access to cheap capital and loans from groups like Celsius. Well, we all saw what happened there, right? These groups absolutely got wrecked and had their main holdings essentially stolen from them, and now they're sort of like infrastructure rich but cash poor. So we've got a very weird sort of professional avatar of who is mining Bitcoin today in 2023. So yeah, you asked me what my thoughts are on the matter, and bro, it's jumbled. It's not as easy to read as it used to be.
Now, question. I was actually looking at it yesterday, and so the mining pool dominance. So I think it's 80% of the mining hash rate is concentrated into 2 mining pools. And do the mining pools? Can you break that down for our viewers? What exactly is a mining pool? I kind of look at it as a co-op of different miners, basically using a mining pool as the liquidity provider that can buy and sell that can sell essentially their Bitcoin to exchanges or to buyers, OTC. Is there? Am I missing something there, or what is the influence when it comes to mining pools?
Yeah, let me suggest a correction to your worldview there, because I think that's a good analogy, but in my opinion, I think we got to go a little deeper than that. So I think you're viewing it as though it's some kind of an arbiter or a centralized entity that helps to exchange value. They're not. Think of them more like a proxy, and think of it as being the same relative amount of effort and hash rate that's going to one place. And that mining pool is a little bit more like a giant They're more like a giant like Fresnel lens, right, or parabolic lens. They're more like a magnifying glass that if you focus it up, right, it can have all the power of, like, all the sunlight that flows through it, but down at a very single refined one point. So imagine having 15 million different people mining Bitcoin, but the Bitcoin network itself only senses the effort from one entity, right? So that's what I mean by proxy, funnel, or magnifying glass. So the mining pool itself, depending on how they pay out, generally speaking, they're not doing as much custody as you might think. They have a lot more automated systems in place and smart contracts in place, depending on the network that you're mining to. But a lot more automation in place than you might think, and a lot more of those payouts are automated without having to consult any exchanges or put any of their reserves with a third-party custodian. But at its core, a mining pool is just that: multiple miners using a proxy to bring all of their combined hash rate to bear on the network, so that that one pool is more likely to win a block reward more frequently. Now, depending on how it's paid out, you don't, on the miner's side, you don't actually get paid more by mining to the air quotes strongest pool. Generally speaking, it kind of all comes out in the wash, right? If you're in a smaller pool, if you're in a larger pool, even if you're solo mining, eventually the game theory is that you should be able to make the time that you spent and the amount of hash rate that you contributed be about equivalent to putting that hash rate at any other pool or mining in any other way.
Well, here's actually kind of just the reference that I was talking about. So this article, that I have pulled up here. So, and is this FUD, or is this more along the lines of just I don't know. So the Bitcoin hash rate is highly centralized. Only 2 mining pools control more than 50% of the total hash rate. And then you see here Foundry and Ant Pool, and then F2 Pool here.
Which, by the way, guys, Foundry is owned by DCG.
Yeah.
So you didn't know that.
So I don't know. I don't know. Just wanted to expand on that. I know you're big into mining.
Yeah, but here's the thing. So the consensus concerns all of us, right? It's governance by any other name, or it's almost like politics, right? Whether or not you're interested in politics, politicians are interested in you. And if you're using Bitcoin, whether or not you're interested in mining or consensus involves you, right? If your Bitcoin transaction doesn't go through, you're gonna be like, hey, let me talk to the manager of Satoshi, right, or whatever. Like Karen will come out and definitely need to make heads roll. So the only way you do that is by understanding how the consensus works. In Bitcoin, it is 51% of the entire net hash, or the entire hash rate, that would have to be controlled for a sustained period of time to start really doing damage. And it would have to be just one pool that does that. Or if it is those 2 pools, like this person is alluding to or fudding about, they would have to work in collusion, combine forces. Now imagine their 2 combined sort of proxies, right, or 2 giant parabolic mirrors or whatever, then shining all that hash rate into a single proxy. That is a real threat if they ever got long enough to make that happen. But that's like saying, okay, imagine that Russia and China are definitely today going to create a brand new federation because they have all the nukes in the entire world. Like, now the rest of the world must cower in fear. They're the new empire. That's almost how ridiculous that sounds, right? Like, as far as the likelihood, just not happening.
Here's the thing too, though, Seth, is, the reason people are comfortable investing and using Bitcoin is because it is the most decentralized thing out there. And so it's not in the best interest of these miners to collude with each other and to either bring the network down or whatever the case is, to degrade the network and the idea of decentralization, because that hurts their business model. And with the millions of dollars they've invested, why would they want to? Why would they want to risk it? Why would they want to do anything stupid? Or
no, it's game theory though. Here's the thing. So yeah, why would they want to risk it? Let's answer that question, right? Let's wrap on some tinfoil and let's go to work. Okay. Here's one reason they would want to do that: because the incentive outweighs their current costs to produce Bitcoin. But the game theory of Bitcoin, as you rightfully pointed out, doesn't normally work in your favor to commit fraud. You'd have to control more than 51% of the network hash rate. You would also have to own enough Bitcoin that when you finally commit one of the exploits that are accessible to you with that 51% attack, that you get away with it. And most people don't have enough of those boxes checked to make it worth their time to go and collude and do that 51% attacks. Like you're saying, you could answer that question though, right? Like, why would they do it? Money. Like, why would you commit any theft at any time? Because you don't fear the repercussions, you don't fear the consequences as much as you want the payout. In Bitcoin, really hard to make that payout worth the risk.
Fair enough. We have a super chat from our community members. They want to ask you a question. They said, "What are your views or opinions on Kadena and their tech?" Also said, "Happy Monday," and make sure to like it.
Oh, well, first off, thank you so much. That's a very kind thing to say. And next person who wants to get my opinion on something, guys, you gotta keep those super chats flowing to these two fine gentlemen because they put in really hard work. I'm just a visitor here.
Are you a fan of Kadena? Because we know it's proof of work, and what's your thoughts?
So they've got a very interesting architecture, and they have a really great leadership team, and they've got a decent roadmap. And every exposure that I've had to their project has been positive. I haven't seen anything yet from their project that's a huge red flag. And pardon for being kind of like paranoid, but in blockchain, especially in infrastructure, we normally have to start with the assumption that everyone is your adversary and everyone's out to get you and steal your shit. That's the safest assumption. That's why Bitcoin works, is because we're all paranoid and nobody trusts each other. And you have to presume that everybody else using the network is equally paranoid and doesn't trust you. Kadena does a pretty good job of that, while also scaling proof of work pretty well.
Yeah, they have a strong community. I think out of the projects, it's sitting outside the top 100 right now. I think out of the projects that are that low on a market cap list or dominance, they seem to have a lot of people beating the Kadena drum. I do know it is losing market dominance, though. It was in the top 80 kind of to start this bear run, I guess you could call it. And it's fallen out of the top 100, so not performing quite as strong as some of the other assets in its group as far as market cap. But
yeah, Robin, these are clear signs though of market capitulation, though, right? Like, is capital flight to the tent pole projects, right? To the majors,
and
blue chips.
If you're bullish, I mean, that's what you want to see if you're trying to accumulate and buy now. So yeah, if you're a fan of Kadena, I haven't. Yeah, like you said, I haven't seen anything negative. I know it's starting to sell off, and it is its first bear market, and so me personally, I like to look into projects that have been through a bear market. Not to say that I wouldn't go outside of that, but just one of the boxes I check when I go to find something. But definitely worth a look at, in my opinion. So.
Also, before we move on, Rob from the chat said, "I'm afraid," or no, he said, "Is there any news that would bring this drop?" I'm not seeing any, like I said, but big Fed meeting on Wednesday. And so people are anticipating this is going to set the tone for the remainder of the year. And so I feel like people have their money on the sidelines. They've taken their gains when they bought Bitcoin at 17, 18, 19, 20, 21. It got up to almost 24. They took their gains. They're leaving the money on the sideline, depending on what the Fed does and says, which, by the way, you guys should definitely check out our FOMC special on Wednesday. You do not want to miss it. We got some great content coming your way. But I think that's what's happening. I could be wrong. Obviously, I don't have any metrics to back that. But you see money flowing to the exchanges. You see liquidity dry up. You see people taking profit. I think that's what it is. And so, yeah. All right, Seth, I want to talk.
Yeah,
Oh, go ahead. Sorry. No, please. Do you have something to say before I move on?
Oh no, just about the Fed meeting. I think that so a friend of mine who he kind of stays behind the scenes. He does some analysis, and he told me kind of privately, was like, "Hey, I think maybe this is all bad. If there's more talk about raising the debt ceiling, that will inevitably lead to QE, and QE has had a negative effect on the crypto market cap." So that was the warning I got from a friend.
QE has a negative effect on crypto? I think it's the opposite. Well, QT has a negative.
Well, no, I'm sorry. So QE, I apologize. There's more to it. QE will line us up for a bigger fall because we may be able to see an overinflated estimate price,
overextended,
rather a fake price for Bitcoin of upwards of 30, 31. If QE enters the picture again before we start tightening again, and then we see that proper correction We actually find like real bottom support for Bitcoin. Everyone, is all cut and bleeding and and whimpering, but then we finally recover.
Well, I like to take a look at I like to look at history. I'm a big history guy, and especially when it comes to markets, emerging markets, financial markets, and you can look back at every time there's been a runaway inflation. I won't say hyperinflation, but where you got outside of what would typically be deemed as normal, where you get upwards of 5 to 20% inflation, and history has said that it'll level out and then it'll sharply increase again. And so you're going to get a big bounce in inflation. At least history says so. So will we see inflation come down? As you said, quantitative easing comes out. People start going FOMO again. And then all of a sudden, the Fed overreacts because interest rates goes back up. Could that be a larger bear market bounce or, bear trap? Perhaps.
I would not. Let me tell you something. I would not want to be the person who Joe Biden brought in to be the financial person for the country, because it is a complete shit show. It's like, we need to raise the debt ceiling, but this can happen. Inflation's high. We need to do this, but this, and then, but we should do this, but we can't. The Treasury, it's a complete shit show, and that is why it's so important. You saw what's happening in Nigeria. They can control the money supply. They can control their fiat dollars, but they cannot control Bitcoin. And so that is why people are flocking to it. And I recommend you do the same. Not financial advice. All right, let's move on. Crypto mining brings stability to grids and prevents renewable energy waste. So this article is pretty interesting. This is a B in crypto. Demand response. So this talks about demand response, which refers to the ability of customers to adjust their electricity consumption in response to changes in the price of electricity or to incentives offered by utilities or other third parties. Example, Texas Grid, ERCOT said, hey, miners, Bitcoin miners, if you unplug, we'll pay you this much money. People are going to be heating their homes more or whatever the case may be. There's a storm coming. They do it and they get paid for it. That's an incentive. Or we don't need to use it. Our price is high. We can scale back. Demand response. Now, initial data shows that demand response has been a runaway success with take up in the 7 figures, far surpassing the forecasted tens of thousands. Now, crypto mining to the rescue. In 2021, Marathon came up with an interesting idea. The firm located a wind farm in Texas with a generation capacity of 280 megawatts, but the transmission system couldn't bring all the output onto the system. By being an interruptible and steady baseload, the crypto mine could pull energy from the wind farm and prevent the need for curtailment when the wind was at full tilt. This not only stabilizes the output from the wind farm, but also helps avoid congestion and problems balancing the grid during different external loads. This innovation shows how the energy crisis has brought about a more practical and creative approach to energy. This is especially true in Texas, where the market is unregulated. It's funny, right? Crypto is bringing all this innovation to energy, high energy costs, not wasting renewable energy, greenhouse gases, the methane thing, the methane burning, whatever it is. Why are we still hearing the narrative mining is bad for the environment? And you got Elizabeth Warren and New York, the New York Department, they did the moratorium, the 2-year on the mining. Like, just in general, Seth, what do you think about what they're doing? And do you think the miners are what's going to drive energy infrastructure moving forward?
Well, I think when it comes to energy-rich states like Texas that have a massive diversity of energy generation like techniques, then yes, you're going to find that that being able to properly regulate power demand the way that they're doing in Texas is only going to improve. And it's big because Texas is really big in manufacturing too. So you can't always to draw a parallel. If you run, say, like a steel refinery, or you run any kind of like a large metal operation, and I mean like aluminum or steel, you cannot let your kiln run out of heat. You cannot let things go cold. That's just the business model. You can never do that. The moment you do, you wind up wasting so much energy getting your heat elements back up to operating temperature that you've already sunk quite a bit of money for whatever that period is. And Bitcoin does just the opposite, right? It's instant off, instant on. The second that you start mining to the network again, and I'm not talking about like that 10-minute block. I mean, the second that you start contributing to it, then you're laying up rewards. You're accruing rewards on the network by contributing to consensus. There's almost no other business model that has quite the same level of of granularity to it. It's as disruptive as Uber and Lyft were to rideshare, only far more so because you can just leave the apparatus in place. It doesn't have to go anywhere. You don't. You can even set it on automated systems to be able to sense when it needs to be turned on and off. And as we're seeing here, you can do it at scale, and it scales almost infinitely. If you had a similar situation to what's happening in Texas across something as a place that is not as well known but has made a name for itself in mining circles like Kazakhstan, like, and I'm not making this stuff up. You can't make it up. Kazakhstan has quite a bit of energy that's been diverted into crypto mining. If you had to, for whatever reason, the region just absolutely had to divert that power to any other useful purpose, the Bitcoin network and all proof of work networks can do exactly what's happening in Texas. So is this a movement? Yeah, I think so. Is there still a narrative that has to do with Bitcoin, whatever, boiling the oceans and single-handedly making multiple unique species of newt go extinct? I don't know why, but yeah, that persists too. And I think to summarize that one as best I can, David, I think people like Elizabeth Warren, the best phrase is haters gonna hate. You just can't change her.
For me, when you sit back and you think about it, when it comes to a power grid or when it comes to generating energy, there's no 1-to-1 ratio for generating energy in comparison to the needs of a region. And so you always have to have a surplus of energy. It has to be. You can't operate 1-for-1 100%. You don't make, however many kilowatts of energy and you use exactly that on the back end. You need to have a surplus for spikes in demand, certain heightened parts of the day, times of the year where you're running air conditioners, as for example. And so there's always in every single region a surplus of energy that gets lost, that dissipates. The amount of electricity that dissipates, I think, is like almost 50% or something like that. I think that is lost, and it's just wasted. And you have a business model. You have something that I don't know of any other industry that can draw this unused energy on demand and also let their foot off the gas on demand if need be, and provide economic value for that. So they're paying for it. So, if you're a hydroelectric dam, you're the wind farm, whatever it is, like, you have extra energy, you can sell it. And if they need to draw on it, you can say, hey, just pause for a minute. We have a high demand. Just turn off your miners for the afternoon. You can boot back up at midnight or whatever it is. And so it addresses a lot of issues. It makes things more economically viable with less losses. And if anything, it's technically more green. If you had a company and you're like, hey, we're throwing away these products, why don't we recycle it, right? And then,
Robin, if people knew how bad that waste was, if you could, so let's put it a different way, right? So the first part of what you said there, how it needs to scale up, based on where you live in the United States, y'all set up shop in a desert, right? If you don't have AC certain times of the year, people literally die. Like, it's no joke. You have to have that power surplus, like you're saying. If you don't, there is not only like a decrease in the quality of life, there is legit loss of life. It's not optional. And no matter how people cry about it, the power has to be there, like you were saying. And in areas where people are trying to provide that same level of service to whatever the local inhabitants are, and they say, no, we have to go green. So you must install whatever this green tech is. Like you're saying, it could be water under the bridge. It could be air passing over these giant wind turbines. Imagine just throwing that away. Those wind turbines, first off, they're not as green as people believe they are, right? They've got a limited shelf life. They only run for so long. They wind up causing ecological damage. They actually, like it has been proven, they do actually damage local populations of birds and stuff. So you actually could. There is a non-zero chance of making certain birds extinct with wind turbines. So Take that, green energy advocates. The thing is, imagine if you did that and you also let the power go to waste. Shame on you twice, right? And Bitcoin solves that problem. Just like you're saying. I'm just agreeing with you, Robin.
Yeah, and just to round it out, like if your company is throwing away millions of pounds of aluminum cans and to the trash, and just be like, what? Like, why don't you recycle it? Why don't you use that unused commodity there, that unused energy, and resell it? Because
it makes sense. And Shell did. I believe it was Shell, one of these large oil companies. They started all the excess power they were burning, or the excess coal they were burning in their refineries. They're using that to mine Bitcoin. And so why not? Why let things go to waste? The whole methane thing is so intriguing to me. Where this methane goes into the atmosphere and harms the environment, these miners are capturing that methane and turning that into powering the network. So, like, you can look at it both ways. You can look at it as, oh my God, it takes so much power. It takes more power than Argentina. But you can also look at the positives too.
But how much of Argentina's power is lost? In the equivalent, how many of Argentina's power usage just dissipates and is unused? How much of that?
Why doesn't E3? Why doesn't E3 or any of the other like major gaming proponents? Why don't they fess up to the numbers of how much people who play PlayStation and Xbox burn every single year annually? Because I guarantee you, it makes that Argentina argument look like child's play.
Yeah.
Nobody likes talking about that because then
I burn at least
with their
5 family homes worth of AC myself personally a week in Call of Duty, bro. I'm just letting you know. The boy's a beast.
Things are starting to click now. Seth, we've kept you way longer than we told you we are. We appreciate you joining us as always, my friend. Guys, go follow Seth on Twitter at Mind Your Biz. Here, actually, let me pull up his Twitter. Also, while I'm pulling up his Twitter, make sure to go subscribe to his YouTube channel as well.
We're gonna send you an Eventbrite too, bro. It's gonna be a 1-person invitation.
Yeah, 1 person. All right, guys. So here is his. Oh, sorry. Go ahead, Rocco. My bad. So here is his. Let me click on this real quick. Here is his Twitter. Make sure to go follow him at mindyour_biz. Happy to see that you follow us too, my friend. And then also make sure to subscribe to his email. I don't know why this popped up, but mindyour.biz. Hey, it was meant to be. And then all jokes aside, seriously, guys, go follow his Twitter or his YouTube as well. That description or that link. What am I saying here? That link's in the description. Seth, thank you. Before I keep fumbling on my words, have a great day, my friend. And we look forward to bringing you on again. Is there anything else you want to leave us with before we let you go?
No, always a pleasure. I can't wait to do the next one in person.
All right, my friend. We'll see you soon.
One last request. Can you drop an hola for the fans over here?
I think I have to keep my shirt on, don't I? Fine.
Yeah.
Hola!
There it is.
My guy. We love your insight, buddy. Thank you so much again. We appreciate you.
Thank you.
Take care. All right. Love having him on, man. He's such a smart guy.
Mm-hmm.
Smarter than you for sure.
Me? Yeah.
So
I'm witty though. You know what I mean?
Yeah.
I might not have the book intelligence, but I got the street smarts.
Wow.
Yeah.
Wow. All right. Let's talk about signing off. So
okay. How does that look?
It looks great. Go follow us on Twitter at Sin City Crypto 1. Guys, as we grow, there's going to be impersonators. Make sure we will never ask you for shite. Nothing. We won't ask you for money. We won't ask you to invest here. Nothing. If you don't hear it from us on this show, it is not real. Do not click on any stupid links or follow any accounts, or we don't do giveaways. We don't do that stuff. So be aware. Also, go follow us on the other social media. Smash the likes on your way out. Go check out some merch. And if you're not a member of the channel and you want to be self-sufficient and not wait around for Jimmy to gift memberships, feel free to do that as well. That link is in the description of this video. With that being said, Rocco.
I like how you say we don't ask for nothing, but then if you want to go become a member right afterwards.
Well, I'm saying if we don't say it on the show from our mouths, we're not just going to tweet it and not say it on the show.
Gotcha. Also, just a little love to the chat. We got a few new people here. Before you get your finger tornado thing going, all right. Some of the new people we have Illa Mac. We got John Foster, McFrey, Big Shrugs, SBF, Esabai. Anyways, Shibalek, Shy Bake Pound, Awake, Hip Hop, Nitro Burp. Hola! Go ahead, David.
Rocco. Friends, family, friends, and family, and family, friends, we thank you so much for joining us on this beautiful Monday. Thanks for kicking your week off. Make sure to come back tomorrow at 10:30 a.m. Pacific Standard Time. But before that, I will be doing a live stream at 6:30 p.m. Pacific Standard Time, 9:30 p.m. Eastern. We'll be talking and covering some basic news. We're also going to be doing some TA, some charts. We're going to take a look. Maybe Bitcoin goes down to 20K by then. You don't want to miss it. Join me, 6:30 p.m. Pacific Standard Time tonight. Until then, we love you guys. Peace.
Pop it.